Micron's latest earnings report. I already told you this 2 days ago that it would be an epic quarter for Micron. Q2 revenue came in at $23.8 billion, surging 196% year over year. EPS hit $12.20, jumping 677%. Net income reached $14 billion, skyrocketing 16 times. Profitability has completely exploded, with its earnings power making a qualitative leap. Gross margin soared to 75%, and operating margin rose to 69%. All these figures crushed market expectations, and this result was exactly as expected. The core driver is the AI-driven double wave. Micron perfectly caught this trend, with strength across all business segments and AI becoming its undisputed growth engine. Cloud storage revenue was $7.7 billion, data center revenue $5.7 billion. The two AI-focused businesses accounted for more than half of total revenue. Meanwhile, mobile, consumer, automotive, and embedded businesses also posted strong growth. Micron proactively shifted production capacity toward high-margin HBM products, fully capitalizing on the AI memory price rally. Coupled with a temporary industry shortage, the company achieved genuine volume and price growth simultaneously. Management stated that in the AI era, memory has become a strategic resource for customers. This industry upcycle is structural and long-term. This is the super memory cycle I've been talking about. Micron's forward guidance was even more bullish than expected. Q3 revenue is projected at $33.5 billion, with a gross margin target of up to 81%. Management clearly signaled that next quarter will set another all-time high. Yet despite this near-perfect earnings report, the stock dropped. In my view, there are two key reasons. First, a massive surge in capital expenditures. Micron raised its 2026 CapEx to $25 billion. With another $10 billion increase planned for 2027 to fund aggressive expansion. While positive for market share long-term, it will heavily drain cash flow in the near term and weigh on free cash flow growth. The market questions the sustainability of profits, as short-term earnings growth cannot keep up with CapEx expansion. Second, the stock had already rallied too much this year, with bullishness priced in early, even with beats on earnings and guidance. In my opinion, the market has already shifted its focus from near-term earnings to actual order wins for next-generation HBM products. Without clear positive order news, it's hard to support current high valuations. Nonetheless, Micron's results confirm that the AI-driven super memory cycle is on solid ground. Strong cash flow, booming businesses, and blowout guidance. The long-term industry uptrend is clear, and supply tightness will persist for years. The industry leaders hold huge advantages. However, after such a big run-up, good news has become a catalyst for profit-taking. The sharply increased capital spending and uncertainty around HBM orders have together made market sentiment turn cautious. In the short term, negative factors are being digested and share price volatility will likely increase. In the long run, demand for AI memory remains strong, and the long-term industry cycle has not changed. Micron's core competitiveness remains very solid. I'm Panda, guiding you through the global wealth landscape. Hit follow to stay ahead of the curve.